righty. And we are watching oil 109.42 and continuing to climb and make new highs. And that is the story. So if you're looking for shorts, or you're looking to just pile in here and just see if you can ride this wave, it's this is an hourly chart, and it's been just a moonshot from these lows. 96.58 yesterday, 98 or 96.58. Now trading 109. 109. Up almost 10%. Markets are having the obviously reverse effect. The Dow is down 600 and change. The ES is down over 100. NASDAQ's down 400. The Russell's down 50. And gold down 188. Bonds also off 24 ticks. The dollar, though, gaining an enormous amount of strength. And I guess, I don't know. What it tells me, and again, my opinion doesn't matter worth a crap. But what this tells me is that a majority of the holdings out there are net long and were net long. And irregardless of what was said, I don't know what anybody was really sitting around waiting for and what anybody really expected to be said that wasn't. I mean, if anybody knows what happens with Trump, he wasn't going to say anything in that address that he hasn't already been said, really. I mean, so I don't know. Again, I'm floored by the acting of surprised everyone is, and I don't get it. I didn't hear anything that we haven't heard. Things don't seem to be any different other than the fact that he's pretty much said, look, we don't use the oil. We took care of this asshole that was over there in charge of it. They're pretty much not in charge of it anymore. There's not really anybody in charge over there. Pretty much said that. And then oil market. So again, what this tells me is that if oil would have gone the other way, I think it really would have wiped out so much of the market. And 9 handles is a big move, but I just look at this like everybody's net long and everybody was net long across the board, especially in the financial system. And if we would have had a massive, if crude would have went the other way, I think we would have been in a financial crisis. That's my interpretation of what's going on. Because why, I just say to myself, why is crude at 110 if we don't use it? And then you're going to have a million people and a million, economists say, oh, it's because, blah, 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 blah. The demand for our oil is going to, it's like, shut up. Shut up. This is all market move crap. And I don't know where it takes us, but that's what I kind of feel is going on today. I wouldn't touch this. I tried trading this last night. I think I had about 3 or 4. I think I had 4 trades, and I made a whopping $8.80. And I had made several trades. I was in some shorts and I was in some longs. I played both sides of it. And, I obviously should have just stayed long, right? Hindsight's great for that. I should have just stayed long, but I didn't. And you can see if you look back on this, like if you look at the larger time frame, right? It's so much easier to say, yeah, just stay in long. Yeah. Okay, shut up. Because you know what? No one's trading futures, at least retail jack-offs like me aren't trading futures on a 1 hour, because you'll get wrecked unless you're trading enormous size, and there's nobody out there in La La Land trading big size anyway, as much as they think they are. You're trading on a smaller time frame, 100 tick, 500 tick, 1 minute, 5 minute even. The price action was telling me to get out of trades, and I was. That's it. And I got cut up, because I don't use very wide stops. I wasn't going to hang in there on anything. And, it was tough. It was tough. And I just gave up. I was like, you know what? Screw this. I'm not going to just, sit there and trade this. And I was in a combine. I didn't do it in a live account, obviously, because I'm not that stupid to trade this wildly volatile environment right now in a live account. I'm just not. Sorry, it's just not going to do it. I learned my lesson a long time ago to mess around with that. So anyway, that's kind of what's going on there. And I think if you look at the positive, which I'm pretty impressed that we're only down 600 in the Dow, 100 in the ES, 400 plus. I would have expected at oil at 109 that these numbers would have been. I expected us to be well over 1,000 in the Dow, maybe more, maybe even closer to maybe limit down. I don't know. I would have expected the damage to be a hell of a lot worse. So I guess and again, we're pre-market right now. So, I'm sure that has a lot to do with it. We're beyond, levels. So I'm not going to get into like levels and all this other stuff because, again, if oil keeps climbing, markets are likely going to keep declining. They're not going to, I don't think they're going to decouple at this point. And so to do so and think it's going to do so is just completely foolish. So that's kind of what's going on there. As far as trading today, I probably am not going to do anything. I am probably going to sit on my hands and because I just don't feel that there's going to be anything out there that could change the trajectory of what's going on today. We almost need like this to be the end of the week. Like it's actually thankful that this is the end of the week for the trading, for trading this week, and that tomorrow is closed and we have the weekend off and come back Monday. And I think, be able to digest all this, next week and hopefully be in a better place. At least market-wise. But as far as like looking at levels here, how in the world are levels even going to matter at this point when you have oil like continuing to make new highs here at 109, likely to go to, I don't know, did it even go to 110 yet? No, 109.84. And, no signs of really a downtick. I mean, this is at a 1 hour, and literally every 1 hour, there's one 1 hour candle that's actually red. Every single one is green. Now, if we go to a shorter time frame, there's a couple of them in there where there were some, I guess, downticks. But you look at this thing, even if you put it on a 4 hour, it's going to be one or two big candles. It's actually 1, 2, 3, 4 in a row, and it's ugly. unless you're long oil. And I fortunately am long oil stocks, but that doesn't bode well for everything else in my account. All right, and so that is it. I am not going to say much more today because, again, I'm looking here, and I got one eye on oil, and I got one eye on stocks, and I am not just going to short in the box either. That to me is a pretty stupid way to do this. I mean, unless you want, unless you're just going to kind of roll the dice, blow on the dice and roll them and say, all right, I'm going to put in, I'm going to risk $100 or whatever it is you're going to risk and then just go short and then walk away. If you want to do that, that's probably the best strategy, rather than think that there's some buying, or this is a high from back in. The market doesn't give a flying fuck about that right now. Does not give a flip about any of that. It's all about oil. So anyway, and to me, it's not worth the stress. It's not worth the stress, and it's not worth getting cut up in this mess. And that's where I'm at again. And I keep flipping through the charts here, and when I see this kind of price action, time has told me, and experience has told me, these are the days that you walk away. These are the days you walk away. You're not a market maker. You're not Citadel. You're not some huge hedge fund where you have to trade today or else your life depends on it. You are not. And even if you think you are, you're just kidding yourself. And you know what? You may actually even have a decent day today. But, to me, it's not worth what could potentially be heartache right before a long weekend too, especially if you're up on the week. Just cash it in, folks. Cash it in today and just consider it a wash. And then as far as stocks, there's going to be stuff that just gets, it's not going to be everything, but there is going to be quite a number of things that just get probably blasted apart today. I see SanDisk gapping down pretty hugely, but again, this thing has been up so much, but this is down, I think, $50 today, down almost 6%. Micron, same thing, huge gap down. Intel as well, down to 46. AVGO, so everything's actually gapped down pretty hard, and it's going to be interesting to see how the market does when we open, and do we gain any momentum to the downside. But everything across the board that I'm looking at, the only thing I can see here that doesn't have a huge gap down is Meta. Meta looks like it's actually, even though it's down, Meta looks like there is no gap, but you got Google with a big gap, right? Huge gap here. All of these, AMD, NVIDIA, every single one so far. The only one that doesn't have it is Meta. Amazon has it. Oracle, I know there's a huge rift in Oracle, laying off 20,000 employees, 20,000 or 30,000 employees. So I know there's a huge rift there. With those layoffs, but if anybody knows, like I saw a few videos of it, and people are like, "Ow, Oracle pissed off everybody." It's like, if you know anything about any of these tech companies, any of them, it doesn't matter. IBM, they do this shit like now that's a pretty big one, but they do this shit every 4 to 5 years. They go through these big layoffs. I mean, I remember when back years ago I worked for Comcast, a big, large company, and they were smart about it. They always did layoffs, but they always kept it under that cap where they had to let anybody know. And the way they would do it is they would do reorgs, and they would just reorg your ass into an organization that they basically just said, oh, well, you know what? That org is not needed anymore. And that's how they did it. And that's still how they do it. So what they do is they reorg people, like, so you know you're getting cut just by how they reorg shit. And if you stick you in an organization where you're like even questioning the name, and you're like, you know, oh, why am I in this organization with all these fucking slugs? Chances are you're getting fucking shit canned. Because that's what happened to me. I mean, I got laid off almost 13 years ago, 2014, 12 years ago from Comcast. And 6 months before, I got reorged into an org that when I looked around, I was like, these are all the fucking losers. These are fucking slugs. These are the people who don't fucking do anything. And I'm like, I got in that group. And I thought I worked pretty hard, but it didn't matter. But they just saw me as a slug. And I got laid off. So it happens in all these tech companies. So I don't know what the big shocker is, but yeah, all these companies are gapped down, and it's going to be very interesting to see how they react when we open. I think the ones that are probably going to get hit the hardest are likely a lot of the semis. They seem to be getting the brunt of it now. Yeah, so there you have it. So anything that we've made up in the last couple weeks or so, any kind of recovery that we've had in the last week and a half, is slowly like cut in half right now as I go through a lot of these stocks. And, with that being said, still the reason why I continue to remain in cash. Even the glorified AI stocks, the Oklos, the SMRs, these things have just gotten absolutely decimated. Now, the only thing that I actually did yesterday is I did a little iron condor on CCJ. I will show you that one in a second. I did actually a couple of things yesterday. I didn't do any directional moves, and I didn't buy any stock, but I did do a couple of iron condors because of volatility being high. But as you look at a lot of these stocks too, they all look absolutely horrific. And even the once NBIS, which looked like it was going to make, the massive deal, and it's going right. And you've seen all the jackasses out there going, yeah, right. Right back almost where it was when they announced whatever they announced, a couple weeks ago, whatever it was, the deal with NVIDIA, whatever it was, blah, 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 right? All bullshit. So it's all back, and all these stocks just look like absolute trash right now. Marvel doesn't look that bad. Now they look at this. This one actually is held up pretty well. Maybe we'll look at something in there. But as far as all these stocks, they just look absolutely horrible. Like even CoreWeave just doesn't seem to be able to get out of its own fucking way at all. Once darling CoreWeave, and I say once darling, it hasn't even been around that long. But you could see it's still stuck in this. It's still stuck in this range that I mapped out back in November. It's still stuck in here. And this is where I had said, look, sell calls above 113, 114, and sell puts below 65. It's actually worked out. I mean, because that's really the only plays you've had in these, and you look at some of these others and they just look awful. Awful. And I'm curious, I'm just going to go look down here. I'm curious to see because I know TradingView puts, I don't see it in here. Usually they have like a buy, sell recommendation in here. I don't see that. They usually have that. I don't see it. But anyway, yeah. I mean, so that to me is why I'm staying away from stocks, because the only stocks that actually have done anything relatively, stable are utilities and anything in the oil business. Utilities have have held up great. If you're looking at something like XLU, XLU has, held up like a champ. That's XLU. This thing is held up like an absolute champ. Healthcare, surprisingly, big gap down, but healthcare, surprisingly, also actually has held up pretty well during all this. In fact, healthcare may actually be a buy even down here. I actually contemplated it, but I didn't. Maybe I should have, but I kind of thought it would go lower. But healthcare surprisingly doing pretty well. Metals have also held up pretty well considering from their tops. But as I said, oil, this is the XOP, and these are like more of the mid cap. It says oil and gas exploration, but these are more mid cap. The Apaches, the Halliburtons, those types of stocks that are in here. They're not the Exxons and the Chevrons. That's in the XLE. That's in the XLE, which that also has done really, really well and held up pretty good. But as far as a lot of the other stuff just not a good, not a good. And surprisingly, in the energy sector, natural gas has done horrible, which is kind of surprising, right? You would think natural gas would have a little bit of somewhat correlation to oil and it going up and doing well, but no, not at all. It's almost like inverse related, which is kind of weird. I mean, maybe again, I'm not a freaking expert. I mean, I was just thinking just from energy terms but obviously there must be just a ton of natural gas out there that, this is not moving the price. So that's kind of the places that have held up. And, if you are going to do something, that's the place to do it. Utilities, energy, and to a lesser extent, maybe even healthcare. Because financials have actually gotten beat up. And I'm actually a little disappointed in myself. I have a decent amount of shares in the XLF, and I had wanted to sell calls on it, and I didn't. Shame on me for not pulling the trigger. I should have a while ago when this thing was back up in the 50s. I had wanted to sell some calls on my shares, and I never did. So anyway, financials have not even held up during this. So, so there's my take, folks. If you're looking for, if you're looking for a little bit more aggressive moves, I think you go with healthcare, and then going into this with the idea that, you could see some downside to this. I would definitely mark this area in here as a good area of support. We pretty much have like a kind of a little double bottom in here short term, and this on a 4-hour chart. Actually holding up pretty good today, considering everything else is getting whacked. Looks like it's going to open around 142, which is like right around this spot. So, I mean, again, if you're looking for some bargains here, and I think healthcare will be something that, not going to say it's recession proof, but it does have a little bit more like staple type of things baked into it, where, because regardless of how the economy does and things, people still need healthcare. I mean, that's right. You know, when it comes to healthcare, nobody cares what the cost of oil is and or anything else, right? So anyway, that's kind of where I'd be looking. And then again, if you're really looking for the safest bets, are still going to be in utilities and energy. And I honestly think the easiest way to play it is in the XLU, because then you don't really need to buy any specific utilities. You can just buy the whole pot. I know there's a number of other ones out there. I mean, to me, this is the one I use. I know there's a million of these out there now. And the reason I like using this one too is because it's liquid. The options are liquid. Everything in it's liquid. The options are liquid. It's highly used. It's got a lot of money in it. I don't even know if they even have what it is in here, what the market cap is. I'm not sure if they even have the market cap in here, but it is one of the larger market cap ETFs, because that's what you really got to worry about when you're messing around with ETFs. Because I see a million videos of people say, you know, here's 3 ETFs that, and when you're really looking at ETFs, you really got to look at just basically 2 things. Market cap. I want one that's got a huge market cap, because I want to make sure there's a lot of money in there, and that there's a lot of other people in this one, because that gives it liquidity. And I want to make sure that the options on that ETF have volume and open interest, because then that tells me that, there's not only John Q. Public trading it, but there's institutional money in there, retirement funds, that type of stuff. And that's important, especially in these ETFs, because these things can get real illiquid really fast if things go south. And that's like something that a lot of people don't even talk about. So that's why you always want to, with ETFs, you always kind of want to stick to the big ones. All right, and that's it. That's all I got. I don't know. Let's take a look back at oils. It's still going up. Yep, 110. And it's not stopping. And so have a good one. Enjoy the day. I'd say take it off today. Just unplug it, man. Just walk away. It's not worth it. And enjoy the long 3-day weekend if you have off tomorrow. And I will be back